Let's talk crypto with DeSyn.
Hey designers, welcome back to our YouTube channel, and today we have a crypto educational video for you. Average weekly net outflows from digital asset investment hit nearly $10 million in December, the highest level since June of 2022. Amid the FTX crash and rumors of possible problems with Binance. Now, among them, the asset management scale of Bitcoin and Ethereum investment decreased by 61% and 62.1% respectively from the peaks in March 2022 and April 2022. Additionally, traders are more interested in crypto investment products in the form of ETFs. In December of 2022, AUM represented by ETFs increased by 5.96% to $1.78 billion, accounting for 9.11% of the total market share. Now, this has raised a new problem. What can traditional investors and managers do to break the limitations of the original ETF? ETFs, which are better known as exchange-traded funds, are investment vehicles that track a particular index or basket of assets and trade on stock exchange. Now, blockchain technology has the potential to revolutionize the way ETFs are created, traded, and managed by enabling more efficient and transparent record keeping and settlement processes. Now, there are several ways in which investors can take advantage of the growth and innovation of blockchain ETFs. Let's take a look. The first one is research. Investors should do their due diligence and research the various blockchain ETFs available in the market to understand their investment objectives, holdings, and performance. This includes reviewing the underlying asset, the ETF's management team, and fees associated with the fund. The second option is to diversify. Investors should consider including blockchain ETFs as part of well-diversified investment portfolios to mitigate risk and enhance returns. Thirdly, you should stay informed. Investors should keep up to date with developments in the blockchain and ETF industries to stay informed about new products and trends. Now, there are a few potential approaches that a manager of a traditional exchange-traded fund could take to break the limitations of the original ETF and create a blockchain ETF. Here are a few potential options. Option 1, use a different underlying asset. Now, one of the possible ways to break limitations of a traditional ETF is to use different underlying assets that is more suited to being held on a blockchain. For example, instead of holding traditional stocks and bonds, the ETF could hold cryptocurrency assets or tokenized versions of the real-world assets. The second option is to utilize decentralized finance protocols. Now, these are built on top of blockchain networks to manage the ETFs and its underlying assets. DeFi protocols offer a range of benefits, including increased transparency, faster transaction speeds, and reduced reliance on traditional financial intermediaries. Thirdly, you could explore the use of smart contracts. Now, smart contracts, which are self-executing contracts with the terms of the agreement written into lines of codes, could also be used to manage the ETF and its underlying assets. Smart contracts could potentially be used to automate the buying and selling of assets within the ETF, reducing the need for manual intervention by a manager. Finally, you could consider a hybrid solution. Now, as a manager, you could also consider using a hybrid approach that combines elements of traditional ETF management with blockchain-based solutions. For example, the ETF could hold a mix of traditional assets and blockchain-based assets and use smart contracts to automate certain aspects of the ETF's management. So where does DeSyn fit into all of this? Now, DeSyn is a decentralized asset management protocol in Web3, which allows everyone to create and manage customized pools-based portfolios with a variety of on-chain assets, such as tokens, NFTs, derivatives, and whatnot. This happens via smart contract. Now, for investors and managers, DeSyn Protocol is the right place for you to execute your blockchain and ETF issuing and trading. Until next time, thank you for watching.